Welcome to Gagliardi's Got Real Estate Podcast, hosted by myself, Gerald, Sabri, and Rocky Gagliardi. We look forward to bringing you more informative information. We've got special guests, hot topics. Make sure you follow on your preferred podcast platform, GSRE socials. We hope you enjoy this episode. All right, good morning, guys. Welcome to another podcast episode from Gagliardi's Got Real Estate. My name's Gerald Sabri, and with me is Sean Reedy from our office. Today's episode 11, and we're touching on finance today with two special guests, Tori 5 Foot from the Broker House in Shepparton and Joel Aitken from the Westpac branch in Shepparton. So welcome, guys, to our podcast.
Thanks for having me.
And thanks for having me.
Guys, just for the viewers, just to introduce yourselves and your role at the bank and as a broker, Tori.
Yep, so Tori 5 Foot from Broker House. Been at the company for about 4 years now. So I am a residential broker, so just helping with all things residential home loans, purchasing and refinancing.
Yep.
And Joel Aitken. I've been Westpac for 15 years now, home finance manager for 9 of those. And same as Tori, just specialising in residential space.
Residential. And what are you guys seeing at the moment? What are you seeing in the market with clients?
So I'm seeing a lot of first home buyers flocking back into the market. Did see a bit of a lull for a while there just because of the RBA or the Reserve Bank and all their increases with interest rates. They've paused them now since about November. So I feel like the confidence is back a fair bit. So a lot of first home buyers and even a lot of construction coming back, which is exciting.
Good to see.
Similar to Tori, a lot of stability now, so customers are a lot more confident with the market, and they are starting to flow back in. And it is a real bit of a blend, purchases, builds, even refinances, and people restructuring their current debts as well.
Yep.
In the current high rate market, of course.
Yep.
Yeah, definitely. And what would be the difference between using a broker compared to going directly to the bank, like yourself, Joel?
I'll let you start with this one, Tori.
As a broker, I'd like to think that we can sort of nurture the clients a little bit better without saying anything bad about the branches or the banks directly. We really take the time to sit down with clients. A point that I would sort of like to speak about is maybe even credit scores. A lot of branches or banks directly might just auto decline a deal because of your credit score. So with credit checks, we can do that first up with the client and just double check what it is. And even if we can't do anything right now, even with second or third tier lenders, we can sort of look into it for you, see what steps you might need to take. Not saying that the branches might not do that as well, but that's just something I think is a really good thing with brokers.
And how many lenders would you typically look through?
So we have 35 to 40 different lenders that we can deal with. Every bank's very, very different with what they will lend and why. So, credit scores, it might be the type of income you have. So you might be casual or you might have Centrelink income. Some banks like it, some banks don't.
Tori's right. There's no denying that obviously a broker's going to have more flexibility in where they can take a client. I suppose when you go directly through the bank, especially if you're someone with more experience, they know the bank inside out. So we know all the bells and whistles and how to make things work and what does and doesn't work. So it's more probably about relationship with the person as much as anything. So there's always going to be good brokers, good bankers, bad brokers, bad bankers. Yeah.
And would other banks, like for yourself, Joel, offer, things exclusively compared to, what a broker might not be able to offer you, offer the client?
Oh, not really. I can't speak for Tori, but I'd assume that they would have access to the same sort of products as that we do. Rate-wise, I think we end up going to the same pricing team at the end of the day. So the rate should be relatively similar. It's just a matter of how much you push for your client. So myself always push as hard as I can for the client to get the best possible rate. I'm sure Tori does the same.
Just for the viewers, just explain or elaborate further on credit check. Especially dealing with a lot more first home buyers. That'd be a good point to touch on. What's some of the pitfalls that you come across with credit checks?
Well, it's important to be upfront and honest from the start as a customer, because it's so common that they don't disclose things like credit cards, buy now, pay later things. And a lot of those things now are visible with comprehensive credit reporting. So it's important that customers are upfront and honest to begin with. If there's any red flags up front, that we address them and we're all over them to begin with. So things like credit cards, we assess based on the limit, not based on the balance. Oh, I pay this off every month. It's not a debt. For us, if you've got access to credit, it is a debt. So, and it's important for people to understand how your credit score is formulated. It's based on stability in employment, stability in location as well, not moving around different addresses as well, not applying for too much credit as well over a short period of time especially. It's not a bad thing to have a credit card or maybe even a personal loan here or there, but if you've got multiple facilities or multiple buy now, pay laters, they're going to come back to buy you when it comes to applying for finance.
Yeah.
And that's an important thing to point out is the credit inquiries. We have a lot of younger clients that they would have no idea that their credit score might be low purely for the fact that they've done 17 credit inquiries in the last 6 months and their score might be 300. The banks really like your score to be over 700, ideally. And with credit inquiries, it's really hard to sort of fix your credit score without just waiting for the time to pass for them to drop off. So it's just a good idea as well for anyone looking at applying for finance for a home loan or whatnot, that they're not inquiring for a million different Afterpay, ZipPay, Wallet Wizard, all these different things. Even if you don't proceed with them, it still put a marks on your file.
Yeah, okay. There you go.
And separate to your credit score, just even general behaviour in your account conduct, because some Afterpay in particular, that's not on your credit file. But if you're riddled in Afterpay or riddled in TAB or anything like that, those things are really going to hurt you when it comes to applying for finance.
Yep. Yep.
And those Afterpay and certain other, I don't know what you quite call them, but they're more prominent now. I mean,
they're everywhere.
I mean, last year, previous to that, you wouldn't hear about it. That's a reflection and a change of, I suppose, of market, of clientele and, cost of living, isn't it? So,
100%.
Yeah.
But it's also not a good look if you can't afford to pay for a pair of jeans up front. You're probably not a good look to go get a home loan.
Definitely.
Yeah. Yeah.
And on the flow of that with credit checks and things like that with the first home buyers, what are the type of grants and schemes available? As you touched on, Tori, and Joel, you've noticed an influx of first home buyers coming into the fold, so in the market in the last 3 months. So what sort of grants are available at the moment?
There's a few different ones. I mean, there's I'll start with the old school first home buyers grant.
Yeah.
It's still out there.
Yeah.
There's the newer grants, which are probably the more popular ones at the moment, but still the first home buyers grant, $10,000. That's primarily for building or brand new properties.
Yep.
So $10,000, you need to live in the property in the first 12 months.
Yep.
So that's very attractive. Otherwise, there's the first home buyer scheme. Do you want to touch on that?
Yeah, so there's a few of them now. So they've got the first home guarantee, the regional first home guarantee, new home guarantee, and the family home guarantee. So the first three of those all have a 5% deposit. So you can get into the market with a lesser deposit. That deposit does need to be genuine though. So it needs to be saved over 3 months. So then you have the family guarantee. So that'll allow single parents to save a 2% deposit. So it just allows them that bit more, leniency with the smaller deposit, and you won't have to pay any lender's mortgage insurance, which is a really good benefit. So they're saving on not only stamp duty. So as first home buyers, you don't have to pay any stamp duty up to a purchase price of $600,000. Between $600,000 and $750,000, you get a concession. After $750,000, you pay full stamp duty, no matter if you're first home buyer or not. But those schemes are really, really good. They'll have no lender's mortgage insurance, and you do get a better interest rate with most of the lenders that offer it. They'll give you the interest rate as if you had a 20% deposit.
Yep.
Great incentive, isn't it?
For sure.
It'll certainly stimulate our market, and we've certainly noticed that as agents. So it should be a very good talking point.
Oh, it saves you thousands. Lender's mortgage insurance is just an expense to the customer. It only protects the bank at the end of the day. So if you can avoid it with one of these schemes, then they're happy days.
Yeah, there has been a couple of changes with those schemes as well in the last year, I believe. So you can now be a permanent resident as well as an Australian citizen.
Yep.
And you can also get the scheme if you have owned a property over 10 years ago and haven't owned the property since. So it must be over 10 years ago and you're still eligible.
Yep.
You still would pay stamp duty in that instance.
Yes.
Yep. So just to touch on LMI a little bit more, so how greatly effective will that be with that LMI versus no LMI within going for a loan? terms of repayments. And
from a cost perspective, it's huge. It depends on your LVR, your lending percentage, but you're looking at 5 to 20 grand in mortgage insurance in some instances, and also higher interest rate. Westpac does have a 0.3 loading. Other banks may differ a little bit from there, but just those two things in particular, you want to avoid them if you can. That's for sure.
Because not many first home buyers would even know what LMI is and what the implications are further down with the interest rate and how that affects their loan long term. So
spot on, because they think that some of them have the understanding that maybe it protects me. It's like a life insurance or protection for their loan, but it's not. It's just a risk for the bank, and that covers them pretty much. It's just a risk assessment based on how far above that 80% mark you go. So it becomes more and more expensive.
Tori, anything to touch on LMI? Or?
With LMI, just one thing to note would be, regardless of the first home buyer or not, if you have a higher deposit, so you're not in lender's mortgage insurance territory, you may have more options with banks depending on your employment as well. So if you come to a broker and you've only been in your job for 1 month, some banks want you to be there for a minimum of 3 months. If you've got a big deposit, we can go to certain banks that go, no, we're not in LMI, that's fine, we're happy that you've got 2 pay slips, we can proceed. Whereas some banks, we know that, definitely minimum 3 months, we can't do anything until then. So a lot of the lender's mortgage insurance deals would have a minimum, whereas if you have a bigger deposit, you have more freedom.
And the percentage there, the threshold of LMI at 80% lend, is that still
80%? I'm pretty sure that's the same for all banks. 80%. Most banks will go up to, say, 95, sometimes higher. But it just becomes more and more expensive the closer you get to that peak. There are other ways to avoid it. You could look at parental guarantees, pretty popular as well. That's instead of having the government as a guarantor, you can have your parents, which is probably a little bit more flexible. Again, you avoid mortgage insurance. Or there are some different professions which banks may also waive mortgage insurance, medical professions being the main one. Most banks will look at 90 or 95% in some cases. So there are
dealing with a few doctors and medical professions, I've noticed that now they're going through certain types of lenders because of, they get some good incentives there, being in the medical field.
Yeah, definitely. It's not just first home buyers at the end of the day. The banks do offer different things with with Medico and with, I think there's some for like accountants and things like that, or lawyers, solicitors, that kind of thing. So if you have a question, you just, give us a call and ask if that's something that would be beneficial to you.
Yeah, certainly some pretty important options there for clients until they really walk in and have a good chat. They'll understand it a bit better, and that's probably the key for any first home buyer or any client looking at funding. There's certainly some options out there, so make sure you pop in and see one of these two guys in the future. Pre-approvals, I just want to touch on, the pre-approval process. It's obviously important for not so much as the buyer, but us as agents as well when dealing with clients and negotiations and sales as such. A standard pre-approval timeframe, guys. What's it sort of? How long is it taking for a pre-approval?
For us, the standard's 90 days. And then, if it does tick over that 90-day period, would suggest that we refresh it as well, especially when the rates were moving rapidly. It was crucial to have a pre-approval in place. It still is very important but it's a more stable sort of
market.
Stable market and stable with bank policy as well. Because the way that it works is we'll chuck a 3% buffer on top of their interest rate. So if the interest rate now 6%, we have to say they can afford it 9%. But through that period where rates were moving quite rapidly, your borrowing capacity was shrinking by the month. So, but very important to have your credit check done and an income assessment done. It's then really just subject to valuing the property, and then fingers crossed you've had no changes to your situation as well, because that will have to all be revalidated too.
Yeah, and it's not taking very long to get that pre-approval. Like Westpac are really great at the moment, to be honest. A couple of days and we get the pre-approval issued, as long as, like you said, the client's told us everything up front. We know exactly what's on their credit report. They've disclosed all their debts. We've done their assessment. We know that we're good to go. We should get that in a couple of days. So we've got multiple lenders that are a lot quicker on their turnaround times at the moment.
And what would be the timeline for formal approvals? Like, are you still saying sort of 14, 21 days? I mean, me personally, a few transactions, it's taken maybe a little bit longer now. What's the sort of timeline you guys are seeing at the moment?
Well, for us, 14 days is usually fine.
Yeah.
21 can't hurt because
Yeah.
you usually got a bit of time up your sleeve. But from our perspective, since the floods, Shepparton, Clayla and Marupna, our policy is pretty much we need to do a full valuation on
Yeah.
every single property.
Yeah.
There's no electronic valuation. So
Yeah.
the 2 or 3 day approvals are out the window at the moment.
Yeah.
But usually a week to 2 weeks is still usually pretty comfortable as long as customers haven't had any major changes to their situation between their pre-approval and their formal approval.
Yeah.
Yeah, I'd agree with that. We do have lenders that are pretty quick, but at the end of the day, majority of this area all need the full valuation. So some of the valuers are taking a little bit longer at the moment.
Yeah.
For whatever reason, we are seeing some higher risk ratings on some of our valuations for
Of course.
location and for market risk or market direction.
Yeah.
With some comments saying that the market is sort of stabilised and things like that. Their valuers have to cover everything in there, so that can cause some issues sometimes with lenders' mortgage insurance deals.
Yeah.
We're not seeing any or many at all falling over or anything like that, but it's just more commentary, more risk assessment that the valuers are doing that may take a bit longer to get the formal approval.
Yeah. Yeah, that's been probably a big one the last 12 months, definitely.
Certainly noticed that.
Especially with, now you're seeing a lot more flooded homes getting renovated. It's obviously been sort of, a bit over 12 months now. You're seeing a lot of those getting sold. So, definitely notice that period of taking a little bit longer there. Have you noticed any properties that actually haven't been flooded but have been in a flood overlay been an issue that's popped up with valuations?
Found issues being with insurance.
Yeah.
So in order to settle on the purchase application or refinance, whatever it might be, is that the bank will always want to see the certificate of currency for their insurance.
Yep.
And we have to be able to prove that they have their flood insurance or even bushfire coverage for if they've got bushfire overlay or whatnot. So especially if the property is advertised that it was flooded or something like that, we always make sure that that's a question they ask you guys as agents or that they actually inquire with insurance broker or someone like that prior to purchasing the property to make sure they definitely can insure that house.
Yeah. And with pre-approvals, obviously numbers of, as you mentioned at the start, have come up, sort of numbers are coming up with a bit more stability. Roughly what would be the average sort of loan amount given at these times? Like, are you seeing a fairly influx or a difference in loan amounts, or they sort of been fairly similar?
Well, people probably lost a good 30% of their borrowing capacity. So you borrow $1 million 18 months ago, you're down to 700,000. So, and it's very tough to do it on your own. Joint applicants have got still got decent borrowing capacity. But as an individual, it's you've really got to be on a decent wicket to make it work yourself. But yeah, sizes do vary. We've still got a very diverse, I suppose, diverse set of
market and different
diverse market,
clientele.
different clientele. There's lower, mid, and there's higher, and there's a lot. That's still probably for you guys. It still turns over quite a lot, maybe in that 300 to 500 mark, but it's maybe sitting on the market a bit longer when it's 600, 700, 800. So it's still a bit in all spaces still going through.
Well, that 600's a real threshold for a lot of people, as you guys would be aware, and we see that firsthand from a stamp duty point of view. People trying to buy under 600 just for that incentive. But probably not understanding the full extent if they're paying between 6 and 630 or something. It's only a pro rata. It's really not a huge amount more.
Oh, it's only marginal. It's only a couple of thousand.
So it's good to hear it from the banks and brokers more so than just agents, because some people will miss out on property due to it. It doesn't make sense, and we try and explain that. But that is a threshold, and we see that around that 600K mark a fair bit. So
for that government scheme, though, there is the cap. Is it 650 in regional? 650. So for them to have that government scheme, they do need to keep it under 650.
If clients want to look on Broker House website, we have calculators. So there's stamp duty calculators, loan repayment, stamp duty, all those kind of things. So if you have a look on there, I think for a $650 purchase price, because you're still getting a discount, I think it's about $12,000 for stamp duty compared to if you bought for $600, it's $0. So if they just play around with that, they can see when they're looking at making offers on properties that, okay, if I do offer $630, it's only going to be $10,000 or whatever it might be.
Yeah.
Yeah.
Yeah. Bridging loans. I think we're probably, bridging finance and bridging loans as such. It's probably a little bit more prevalent. I've probably noticed, probably in the last 12 months, probably the change of market. You guys obviously will be seeing a lot of that through both offices.
Yeah, it has picked up a bit, probably due to serviceability issues in a lot of cases. People wanting to buy before they sell as well, not be reliant on, obviously, sales are turning over so quickly, they're not probably moving as fast, but they still want to buy. So it can be a very expensive exercise. You're looking at 9 to 10% usually, plus a lot of more fees attached to them. Sometimes they're unavoidable. But yeah, they are an option, and they are becoming more popular, probably more suited sometimes for retirees. That's what I probably do more of when it comes to bridging. There is another option that we do use, and I'm not sure if every bank does it. Most of the big banks would. It would be substituting of securities. We call it a portability. So same sort of thing, buy and sell, but you try and line the settlement dates up together, and then you don't have to apply for a new loan. You can retain the existing loan you've got. That's only really works so if you don't need additional funding. But that's again good for self-employed that maybe haven't been self-employed for long enough, people that aren't in employment at the moment, or retired, because there's no credit check or serviceability check for that.
It's just a straight swap over.
Spot on,
Yeah.
I haven't really heard much about that. That's portability.
Yeah, portability or substitute security, some banks call it. So, it's becoming more and more popular. It's a lot cheaper than going down the bridging track, but then you've got to line up your settlements to be same day.
Bit harder to,
Sometimes not possible, but if we can manoeuvre it that way, it's ideal. They might be able to get into the new property under a lease agreement or stay in their property on a lease agreement. So a few dominoes need to line up, but it can be a good option and a lot cheaper option than a bridging loan.
Yeah.
With the bridging loan, is there a time frame that the banks allow that bridge loan to be open for until you've paid it off, sold that asset to pay it off, or what? How does that sort of sit?
For us, it's 12 months, but also you have a 1% increase on your interest rate after 3 months. So you want to get them wrapped up as soon as you can, ideally, because your 9.5 turns into 10.5, and then that can maybe be higher at other banks as well. So a bridging loan's ideally not a long-term play. It might be worth shaving a little bit off your price than waiting another 6 months to sell it sometimes.
And would that 10.5 or 9 to 10.5, would that be for both loans? So say, for example, you got $300 on your current loan and you purchased $600, or so you got a $900,000 loan.
Just roughly, on the bridging portion.
Just on the bridging portion,
The residual debt, that's what you need to meet your serviceability on. That will just be on your standard loan rate.
Yeah.
In a majority of the cases, that bridging loan, the interest is capitalised, so you don't have to make repayments on that bridging loan. So you just watch the interest capitalised until that property is sold.
So you get a fair hit at the end.
Yes, it can be painful, but it is definitely an option. If, like you said, I know we've had discussions before about the properties, staying on the market longer that are obviously worth a bit more.
Yeah.
So it gives you the opportunity to be able to get into the market or upgrade your home potentially, but also giving you the 12 months to sell the other property. You may not have negotiation with the current vendor to be able to say subject to the sale of my house. They may already have that in there, so they're trying to sell their house to buy another one, and it just gets way too messy. So it's definitely an option, but yes, it is expensive.
Yeah, definitely these days we don't do too many subject to sales within the market because, as I said, it's days on market's a lot, more than 4 to 5 weeks sometimes. So, it's definitely a better option if the client wants the property, enough to do that, make that risk. So,
it is an option, and we do see it from time to time, and that's probably, again, change of landscape. And if it's a deal there to be done, well, both vendor and purchaser and everyone's happy, we'll certainly put it to the table for consideration to make something happen. Interest rates, quickly, thoughts, opinions. One, where we sit now for lenders, obviously it's around 6%, and where you forecast 2024 for interest rates, guys?
Joel?
Well, I have to trust Westpac's economists, I suppose. Most economists sort of expect there to be a drop before the end of the year, hopefully multiple. But yeah, I mean, realistically, we're probably looking at between 2 and 4 drops in the next 18 months. Touch wood. So see how we go. We'll believe it when we see it, though.
Yeah, correct.
Yeah, fingers crossed for that. I know, trying not to forecast too much or give any guarantees, because obviously we have a lot of clients, we're giving borrowing capacity calculations now and saying, but potentially if they're not where they need to be right now, that maybe we'll be getting rate cuts and that could change your capacity. But there's just, no guarantees.
Yeah.
No. Guys, anything else, any important topics that you think is relevant now for our viewers to touch on that we haven't discussed?
Not particularly I can think of, Tori.
No, I don't think there's anything. I think it's just a good idea to be, even if you're not ready to be purchasing right now, just having a discussion, whether it be with your broker or your banker, just so they can help you with a plan. Because it's really hard to know by just Googling or looking online to find the right information. So if you contact a professional, they can help you as best they can.
Free advice.
Yes, that's correct.
I think if you look online, it'll just confuse you more.
Yeah,
You'll just get
definitely.
even more confused. It's good to sit down and see someone face to face, whether that's a bank or a broker. Just go get some personal advice.
Yeah, especially if you look online, it might say you can borrow up to 700,000. You set your hopes up on your dream home, and then you go to the bank or broker and get a bit of a reality check. So sometimes, definitely agree on that.
Yeah. Lastly, construction loans. We haven't touched on that, but obviously, again, it's changed a fair bit, dropped off a little bit, started to pick up again now. You are seeing more, you touched on it earlier, construction loans across the board, more for...
Yeah, having a few contracts start to flow through, which is great.
Yeah.
Obviously, construction prices have sort of had a bit of a jump because of obviously what's happened with supply issues, COVID, etc. But it's starting to be. Luckily, we've been more stable as a region.
Yeah.
Obviously, there's a lot of builders going bust around the country, but locally, it's looking pretty good. So it's starting to flow through.
Good to see.
Yeah, we're seeing a lot of the land that our clients might have purchased a couple of years ago that are now titled. So that might be why we're seeing an influx coming through. We are having a few clients shopping around for builders, so they may have had their heart set on a certain builder, but their price has just gone up so much, so they've had to readjust what they think they're going to be able to build now according to their new capacity. But it's good to see that they're definitely still getting built and we're getting applications approved.
Yeah. Excellent. All right. Well, guys, thank you. We'll wrap it up. Great to meet you both. Great to have you on our podcast. Hope you viewers all enjoyed episode 11 on all things finance. Make sure you watch us on your preferred podcast platform, and we'll see you again soon for episode 12.
Thanks for listening. Please subscribe on your favourite podcast platform so you don't miss upcoming episodes. We would love you to share this podcast with your network, and if you have any questions or feedback, please connect with us via our social network or head to gagliardiscott.com.au.